Hey everyone, welcome back to Blockchain of Raw News, your go-to source for the latest XRP updates and insider insights. Today, we're diving into 3 massive catalysts that could move XRP like never before. And honestly, 2 of these are flying completely under the radar. If you're serious about understanding XRP's potential and positioning yourself for what could be a historic end to the year, you need to pay attention to this. As always, your support matters more than you know. Every like and subscribe helps me continue breaking down these developments for you in real time. And if you're looking for a reliable place to buy XRP, don't forget to check the link in the description to my favorite exchange. Let's jump straight into it. The first catalyst might seem a bit boring, but it's still extremely important. We're talking about the flood of cryptocurrency ETFs that are about to hit the market. Right now, the government shutdown is slowing approvals, but make no mistake, the shutdown will end. And with it, we can expect a massive wave of ETF approvals for XRP and other crypto assets. While many traders panic over headlines about shutdowns and tariffs, these fundamentals are what truly matter. Once the government reopens, the demand created by hundreds of ETFs entering the market will be enormous, and XRP is poised to benefit significantly. This isn't just speculation, it's a predictable surge in institutional demand that could drive price action dramatically. The shutdown might even amplify this effect, turning what some see as a roadblock into a springboard for market activity. Now, here's where things get truly exciting and where most people aren't paying attention. The second catalyst is regulatory clarity, particularly around the Commodity Futures Trading Commission, CFTC. The new head of the CFTC is proving to be a massive XRP bull. For those who don't know, Paul Atkins previously set a pro-XRP tone at the SEC, and now with the CFTC leadership aligning similarly, XRP's regulatory landscape is shaping up to be extremely favorable. This is not just a minor update, it's foundational for the next few years. Having leadership at major regulatory bodies who understand XRP and recognize it as a non-security commodity can directly influence policies that open the doors for institutional investment. Unlike Bitcoin maximalist regulators who might focus solely on Bitcoin, this team is clearly looking to support the broader crypto ecosystem, which is bullish for XRP and for all digital assets seeking mainstream adoption. Finally, the third catalyst is speculative but potentially game-changing. Brad Garlinghouse, the CEO of Ripple, is reportedly leading the discussions for a cryptocurrency advisory council under the Trump administration. If this comes to fruition, it could be one of the most bullish developments for XRP in years. Having Garlinghouse involved at the policy-making level ensures that XRP's voice is represented and that institutional and regulatory clarity continue to improve. When you combine this with a pro-XRP CFTC and the ongoing ETF rollout, the picture becomes very clear. XRP is being positioned for massive exposure, both in regulatory and market terms. This is the kind of development that could attract trillions of dollars into the crypto space over the next few years, and XRP is at the center of it all. So, as we track these 3 catalysts, the ETF flood, the pro-XRP regulatory leadership, and Garlinghouse potentially on the advisory council, it's clear that the end of this year could be transformational for XRP. Make sure you stay tuned, stay informed, and keep a close eye on these developments. The combination of these factors isn't just incremental growth, it's a potential paradigm shift for XRP adoption and market positioning. Now that we've covered the ETF wave and the pro-XRP regulatory leadership, let's dig deeper into how these catalysts could directly impact XRP and what investors should watch for. One of the biggest stories flying under the radar right now is the sheer magnitude of institutional interest that's building quietly behind the scenes. We've seen the market react cautiously to headlines, but what isn't getting enough attention is how institutional investors are preparing for XRP exposure without actually holding the coin directly. Due to operational and compliance hurdles, big banks and funds can't just store hundreds of millions of XRP in a wallet without navigating complex audits, insurance requirements, and legal oversight. This $300,000 per year compliance hurdle has kept many potential investors on the sidelines, but it also sets the stage for a major upside once simpler regulated vehicles like ETFs or investment funds become widely available. For those of us holding XRP, this means that demand could skyrocket when these on-ramps are fully operational. One particular initiative worth highlighting is Evernorth, a new XRP-focused investment vehicle backed by Ripple and major partners like SBI Holdings. Evernorth is planning to create one of the largest institutional XRP treasuries ever assembled, raising over $1 billion to acquire hundreds of millions of XRP. This isn't just another corporate play. It's a pathway for traditional investors to gain XRP exposure safely and legally without jumping through compliance hoops themselves. Once Evernorth goes public, it essentially acts as a proxy for XRP investment, allowing funds and institutions to participate indirectly. This is crucial because it signals that the infrastructure for mainstream adoption is finally catching up to the technology. While the general market may not react immediately to announcements like these, the long-term impact could be enormous. XRP liquidity may tighten as more coins are held in these treasuries, putting upward pressure on price over time. Meanwhile, the timing of all these developments align perfectly with the ETF approvals we discussed earlier. Imagine the combination of ETFs, Evernorth's massive treasury, and regulatory clarity. XRP could see a perfect storm of bullish catalysts converging almost simultaneously. Many retail investors are still focused on short-term headlines like government shutdowns or minor market dips. But the real movement is happening quietly in the background. This is where patient, informed investors have a real advantage. By understanding the broader picture and recognizing the mechanisms through which institutions will enter the market, holders can position themselves for potential gains without chasing hype. This is not about predicting a sudden pump. It's about seeing how foundational changes can drive sustainable long-term adoption and value growth. Another critical point is the role of ETFs as a bridge between traditional finance and XRP. Large institutions are naturally hesitant to buy and hold cryptocurrency directly due to compliance, custody, and audit requirements. ETFs simplify this process, making it legally and operationally feasible for big investors to get exposure to XRP without directly touching the coin. Combined with initiatives like Evernorth, this effectively opens the floodgates for trillions of dollars in potential institutional investment over time. The market may not immediately price this in, but once these vehicles start executing their strategies, we could see significant price action. This is a classic example of structural catalysts, long-term foundational developments that are easy to overlook if you're only watching short-term price charts. Finally, let's talk about the broader implications for individual XRP holders. Understanding these institutional dynamics isn't just academic, it informs your strategy. You don't need to trade every day or react to every headline. Instead, focus on the structural story, regulatory clarity, ETF approvals, and large-scale treasury builds like Evernorth. These are the levers that can move the market fundamentally. Patience and informed decision-making will likely be rewarded more than impulsive trading based on volatility or fear. By staying updated with credible news and analyzing market infrastructure changes, you're better positioned to benefit from XRP's adoption curve over the coming months and years. Beyond regulatory clarity and institutional adoption, there are several macroeconomic and market dynamics that could act as additional catalysts for XRP. One of the key factors to watch is monetary policy, particularly interest rate decisions and quantitative easing programs from the Federal Reserve. Currently, markets are pricing in modest rate cuts. But if the Fed surprises with more aggressive cuts, liquidity could surge across all asset classes, including cryptocurrencies. XRP, with its growing adoption and infrastructure support, could see a significant inflow of capital as investors search for yield and diversified exposure. Historically, periods of easing have coincided with increased risk appetite, meaning investors and institutions alike are more willing to explore alternative assets like XRP. This is why staying informed about macroeconomic indicators is just as critical as monitoring crypto-specific developments. Another interesting macro driver is geopolitical news and trade policies. We've observed that global trade announcements, tariff decisions, and political developments often create short-term volatility in traditional markets, which can spill over into crypto. XRP, as a bridge asset designed for cross-border transactions, is particularly sensitive to these shifts, because institutional players view it as a solution for liquidity and settlement. The combination of regulatory clarity, ETFs, and macroeconomic tailwinds could set the stage for a multi-layered rally. Unlike typical pumps based purely on speculation, these are fundamental catalysts with structural support, meaning the price moves could be more sustainable for holders. This underlines the importance of looking at the bigger picture rather than reacting to daily market noise. A third macro-related factor is technological adoption and partnerships. Ripple continues to expand its network of banks and financial institutions using XRP for liquidity solutions. While retail investors often focus on price action alone, the underlying adoption metrics are what truly dictate long-term growth. Each new banking partner and cross-border payment corridor increases XRP's real-world utility. This is not a hype metric, it's a measurable expansion of the network that directly impacts demand. Institutional players recognize this utility, which is why they prefer regulated entry points like ETFs or companies like Evernorth. Understanding this connection between adoption and investment behavior is key to analyzing XRP from a professional standpoint. It's also crucial to highlight how market structure interacts with these catalysts. Large whales and institutional investors often wait for optimal conditions to deploy capital rather than reacting impulsively. XRP's current environment, ETF approvals, regulatory support, Evernorth Treasury bills, and macroeconomic tailwinds represents one of the most strategically favorable windows in years. Observing market patterns like tightening Bollinger Bands, volume accumulation, and whale activity can offer insight into potential breakout points. These technical signals, when combined with fundamental catalysts, provide a comprehensive perspective that goes beyond mere price speculation. It's about understanding how all the moving parts align to create conditions favorable for significant market moves. Finally, for individual investors, the key takeaway is patience and strategic positioning. Daily volatility can be distracting, but XRP's long-term potential hinges on institutional adoption, regulatory clarity, macroeconomic support, and real-world utility. By maintaining a diversified portfolio, staying informed on structural developments, and tracking high-conviction indicators like ETF rollouts and treasury builds, holders are better positioned to benefit from these catalysts. The market is maturing, and those who understand the interplay of fundamentals, macro factors, and institutional behavior will likely gain a competitive edge. For Hudson XRP News viewers, this means focusing less on short-term price swings and more on the structural story driving XRP adoption and demand over the next several months. As we move deeper into 2025, another major factor shaping XRP's trajectory is the role of institutional investors. Unlike retail participants, institutions cannot simply purchase crypto directly without navigating compliance, custody, and audit requirements. This operational friction has historically slowed large-scale adoption of digital assets like XRP. Solutions such as ETFs and regulated investment vehicles like Evernorth are creating on-ramps that address these hurdles by allowing institutions to gain exposure indirectly. These structures remove barriers and invite significant capital inflows. This is a critical point because demand from institutions doesn't just move prices temporarily. It establishes a base of long-term holders who treat XRP as a legitimate financial asset rather than a speculative token. From a professional standpoint, this is exactly what the market needs to transition from wild swings to more structured growth. Another interesting angle is liquidity management. With over $1 billion committed to structured XRP treasury projects like Evernorth, a large portion of XRP is being effectively removed from liquid circulation. Reduced liquid supply combined with increasing demand from ETFs and institutional funds sets up a classic scarcity scenario. In financial markets, scarcity often precedes significant price moves, particularly when paired with growing adoption. This is why careful monitoring of treasury activity and ETF approvals can provide early insights into potential price acceleration. Unlike retail-driven pumps that are unpredictable, these movements are grounded in structural demand changes which can be much more reliable for both short-term traders and long-term investors. Retail adoption is also playing a pivotal role. While institutional mechanisms create a foundation for large capital inflows, retail participants provide the additional liquidity that ensures markets remain active and efficient. Platforms offering XRP access through user-friendly apps and exchanges continue to expand, making it easier for everyday investors to participate. For someone holding XRP today, understanding this dual-layer demand from institutions and retail is crucial. When both layers align, price moves can be amplified, and volatility often favors those who are prepared and informed. Hudson XRP News viewers should focus on both fronts, watching institutional signals like ETF approvals and Evernorth moves while keeping an eye on retail adoption metrics that indicate growing engagement with XRP. Another major consideration is cross-border utility. XRP's core value proposition has always been facilitating faster, cheaper international transactions. As banks and remittance networks increase usage, transaction volumes rise, which reinforces real-world demand for the token. Unlike purely speculative assets, XRP's utility creates intrinsic value that cannot be easily ignored. Professional investors often look at metrics like transaction volume, active wallets, and integration with banking corridors to gauge health and growth potential. In combination with institutional adoption and regulatory clarity, strong usage metrics can support higher valuations and provide confidence that XRP isn't just another crypto trend. It's a functional financial tool with measurable impact. Finally, timing and positioning matter with multiple catalysts converging. ETF approvals, Evernorth Treasury accumulation, regulatory support from the CFTC, potential crypto council advisory roles, and macroeconomic tailwinds. XRP is entering a period of high strategic opportunity. Investors who understand this alignment can position themselves thoughtfully, whether through phased accumulation, exposure via regulated funds, or monitoring high-conviction technical setups. This is not about chasing hype. It's about informed participation in a market where structural catalysts are finally aligning. For Hudson XRP News viewers, the message is clear. Keep a long-term perspective, understand the underlying drivers of demand, and be ready to act strategically when these catalysts start to unfold. As we wrap up this comprehensive analysis of XRP, it's important to tie together all the moving pieces that could define its trajectory over the next several months. We've discussed regulatory clarity from the SEC and CFTC, the flood of ETFs, institutional adoption via structured funds like Evernorth, and continued retail engagement. When these factors converge, the market is positioned for potential significant upside, but as always, preparation and strategy are key. Professional investors don't rely solely on hype, they combine macro awareness with measured positioning. For Hudson XRP News viewers, this means understanding not just what is happening in the headlines, but why these catalysts matter for both short-term price action and long-term structural growth. Risk management cannot be overstated. Even with strong fundamentals, XRP remains a cryptocurrency with inherent volatility. Price swings of 10 to 20% in a single day are not uncommon, and market sentiment can shift rapidly based on global macroeconomic news, unexpected regulatory statements, or sudden large-scale trades by whales. The key takeaway here is that while institutional infrastructure, ETFs, and regulatory support are reducing uncertainty, no asset is entirely risk-free. Maintaining a diversified portfolio, setting clear entry and exit levels, and avoiding over-lever are essential practices for anyone participating in XRP's market. Hudson XRP News strongly encourages viewers to approach these opportunities with discipline and a focus on sustainable gains rather than chasing speculative spikes. Another actionable insight is the strategic use of on-chain and technical indicators. Observing metrics like wallet growth, transaction volumes, and liquidity concentration can provide early signals of institutional accumulation or large-scale whale movements. Similarly, technical analysis of support and resistance levels, Bollinger Band compressions, and volume trends can help gauge potential breakout or consolidation points. By combining fundamental insights with technical observation, investors can develop a more complete picture of XRP's market dynamics. This dual approach increases the likelihood of making informed decisions rather than reacting emotionally to market noise. Looking ahead, XRP's growth story is closely tied to broader trends in the crypto ecosystem. Increasing acceptance of digital assets by traditional financial institutions, expansion of cross-border payment networks using XRP, and broader adoption of blockchain technology in corporate operations all reinforce XRP's utility and relevance. While speculative events like ETF approvals or high-profile endorsements may trigger short-term price moves, the real long-term value lies in adoption and infrastructure development. For Hudson XRP News viewers, staying updated on both macro trends and regulatory developments is critical to navigating this evolving landscape. In conclusion, XRP is at an inflection point. The combination of regulatory clarity, institutional on-ramps, real-world utility, and macroeconomic tailwinds creates a uniquely compelling environment for investors and enthusiasts following Hudson XRP News. The opportunity lies in understanding these catalysts, positioning strategically, and remaining patient. Markets move in waves, and XRP is entering a period where multiple catalysts are aligning, potentially driving significant long-term growth. Discipline, awareness, and a focus on fundamentals will separate successful participants from those reacting purely to hype. Hudson XRP News will continue to provide clear, insightful updates, helping viewers navigate this exciting chapter for XRP with confidence and informed perspective.